In 2024, over 26,000 crores worth of health insurance claims were rejected by insurers. But why? Well, because this is the policy copy you get when you buy a health insurance. And if you look at it carefully, you'll find 9 hidden clauses that make sure the insurer is not paying your bill. I even have an awful meter over here to find out how bad they actually are. So we'll start with the first one, which is the sublimit. So let's say that you bought this policy. And this policy says that your sum assured is 10 lakh rupees, which means that if you get admitted to a hospital and you get a bill of up to 10 lakh rupees, the insurance provider will cover it for you. And if it crosses 10 lakhs, then you pay it from your pocket. So let's imagine you get admitted to a hospital and the treatment for a particular disease costs like 5 lakhs. But you have a sum assured of 10 lakhs, so you're safe, right? Wrong. In this case, they would actually pay only 2 lakhs and not the 5. You would pay the rest. And the reason is because of sublimit. If you look over here, you'll notice that this particular disease has a sublimit of 2 lakh rupees, which means they won't pay you more than this. So what you have to learn from this is, if you find a health insurance that's really cheap and has a great sum assured and you think, damn, I've got to buy it because bahut sasta hai, maybe it has a sublimit that should not exist over there. This gets a 3 on 10 on the awful meter. And it gets a 3 on 10 because if you miss the next clause, even if you don't have sublimits, the insurer could refuse to pay up to 50% of your bill. And when I was looking for it, I actually couldn't find it because it's sneaky. It's right here under room modifier, and over here it says room rent capping.
Yeah, so room rent capping is probably one of the most misunderstood clauses in an insurance contract.
This is Shrihit. I first discovered him on his amazing writing on FinShots. He also knows a lot about insurance because he's the co-founder of Ditto.
Okay, so the way this works is room rent clauses are sort of explicitly mentioned in different ways. So either you will see something like 1% of your sum insured is set aside for room rent payouts, or you will see something like, hey, listen, you can pick a room, anything you want, so long as it's a single private AC room. And in both cases, irrespective of how it is worded, it is essentially a restriction.
Now, I know this may not seem like a big deal, but here is where you are wrong. Imagine the limit is 5,000 rupees and that single AC room is not available, but a deluxe room is available, which is 10,000 rupees. So you think, I'll be there for 3 nights, 10,000, 10,000, 10,000, that's 30,000. The insurer said he has a limit of 5,000, so they'll pay 5,000. Total 30,000, you'll actually only pay 15 and the insurer pay 15, right? Right? Absolutely wrong. The amount you have to pay will be 1.5 lakhs and the insurer will pay another 1.5 lakhs for the total bill to be 3 lakhs. Let me explain. It's called proportionate deduction and it's freaking crazy. Imagine this. You have a limit of 5,000 rupees for a room. Everything else that you spend, so say on surgery, medicines, consultation, etc., will come to whatever bill. As long as it's within your sum assured, the insurer will cover it. But let's change one thing here. Instead of getting a 5,000 room, for whatever reason, you get a 10,000 rupee room. And all these things still exist. What you just did was get yourself a better room, but you just agreed to pay 50% of the bill. You see, the difference between these room rents is 50%. So the insurer says, I will proportionally deduct 50% from everything, which means if this total bill over here is 3 lakh rupees, he will say, Baba, 50% tha, 50%, 50%, you pay 1.5 lakhs, I'll pay 1.5 lakhs. The point is this, there should be no room rent capping when you get an insurance. This gets an awful clause rating of a 4 out of 10. So take a look at this. Over here, it's called the no claim bonus. And if you look at the no claim bonus, it'll say no claim bonus, a no claim bonus of 20% of the sum assured for each completed and continuous policy year. This is really cool for a bunch of reasons. So let's suppose your sum assured is 10 lakh rupees and there's a 20% over here that is a no claim bonus. So if you don't claim anything, it becomes 12 lakhs. Then the year after that, if there's no claim, 14 lakhs, and then 16 lakhs, and 18 lakhs, and then 20 lakhs. You get the point. But here's the problem with it.
If you get the no claim bonus and your room rent is capped at 1%, it does not automatically mean that it will now be calculated as 1% of your new sum assured with the no claim bonus added. Instead, the actual room rent restriction of 1% is calculated based on the actual sum assured. So bonus is not counted.
And then we also have this little thing here called the restoration benefit. Now, this is sold as this glorious thing. So let's suppose you have 10 lakh rupees as your sum assured and you spend all of it within that period of your policy. And this restoration benefit will basically fill that up and bring it back to 10 lakh rupees for you to use again. Sounds good, right? But it's actually not, because sometimes these guys do not allow the restoration amount to be reused for the same disease. I give this clause an easy 4 on 10 on the awful meter because this is actually pretty bad. But wait till you hear the next one. Co-payment. Now notice this co-payment thing is expressed in a percentage, and co-payment is exactly what it sounds like. You co-pay. So over here it says 20%. This basically means if it's a 1 lakh rupee bill, you co-pay and you pay 20% of it. And in return, the insurance costs a few thousand rupees less.
But there's also another version of the same idea that features in many policies these days. It's called a deductible, right? In most cases, what the insurance companies will tell you is, hey, instead of paying sort of a percentage value, you pay something every time you have to make a claim. And then whatever comes after, so the bill is 5 lakhs and the deductible is set at 2 lakhs, you pay the 2 lakhs and the remaining 3 lakhs is paid out by the insurance company.
You're buying a health insurance just so you don't have to worry about the hospital bill. Simple solution. Avoid co-payment clause. So I give this a simple 5 out of 10 on the awful clause meter. But wait till you hear about zonal co-payments.
So if you open your sort of policy terms and conditions, you may see that insurance companies will have something like zone-wise payment structure, right? So they'll say people in zone 1 will pay a certain kind of premiums, people in zone 2 will pay a certain kind of premiums, and people in zone 3 may pay different kinds of premiums. And the reason why this happens is because insurance companies can then use differential pricing to target people in different cities. So for instance, if you're living in a city where medical expenses are way below the national average, then automatically insurance companies can come and say, we'll offer you a lower premium simply because we don't have to pay as much to the hospitals there. However, the challenge happens when somebody buys a policy claiming that they're in a tier 3 city and then consistently make claims in tier 1 cities. Then the insurance companies can come and say that, look, we'll mandate you to pay a portion of the bill yourself.
So simple solution, avoid zonal co-payments. Okay, this one is really important, the waiting period. The one that you should first know about is the initial waiting period, which is 30 days, which means as soon as you buy your health insurance, for the first 30 days, you aren't covered for anything. You just have to wait. And sometimes some specific diseases aren't covered for an X number of years. In this case over here, it's 3 years. So make sure this is as low as possible, but every health insurance policy has this. So let's take a hypothetical example. Let's suppose you have a blood pressure problem and you tell the health insurance people that, yeah, I have a blood pressure issue. And for some reason, you have a heart attack 1 year after you buy it. If they can connect your heart attack with the blood pressure, which is a pre-existing disease, they basically won't give you the claim. Basically, this means you should buy the health insurance when you're fit, not when you're sick. But this gets a 6 on 10 on the awful clause meter. This one's really cool actually, and it's called the top up. This is sold like any internet recharge. You have 100 GB ka limit, want to get another 50 GB top up, scratch this card and pay 50 rupees. I know, we don't have scratch cards anymore. But the same logic is for health insurance as well. You have 10 lakh rupees sum assured, you can get a top up of another 10 lakh rupees, bringing your grand total to 20 lakhs. But this has a big problem. Let's say your top up has a deductible of 10 lakh rupees. It means the top up will only get activated once the medical bill crosses 10 lakhs. Now say you get hospitalized and the bill is 10 lakhs. This amount will be paid by your sum insured. But now, let's say you get hospitalized again and this time the bill is 5 lakh rupees. Now, even though you have a 10 lakh rupee top-up, that is useless because the top-up only gets activated if the medical bill crosses 10 lakhs. So you will have to pay all the bill by yourself. So this clause gets a 7 on 10 on the awful meter. So what should you actually get? You should get the super top up.
So instead of you having to pay the deductible over and over again every time you make a claim, all you have to do is pay the deductible once and the insurance company will pay out the remaining expenses. And so you don't have to worry about paying the deductible every time you make a claim.
And then we have Daycare. So if I look at this over here, we can see Daycare procedures and treatments. Over here it says all procedures are covered up to annual sum assured. Basically, it means if you have to get hospitalized, but it's not 24 hours. It's something that you're in a procedure for a few hours, or basically in Daycare, less than 24 hours. This could be, say, cataract or dialysis or tons of other things. Then does the insurer actually cover it or not? Because these are valid procedures that are affecting your health and the insurance must cover it. But some of them don't. Why? Because they add a clause over here that says you must be hospitalized for at least 24 hours before you cover it, which basically means that the health insurer is not covering Daycare. Not covering this would be very sneaky, and I would give that clause a easy 7 on 10 on the awful clause meter. And now, we have cashless and reimbursement. But what is it?
Few years back, what would generally happen is insurance companies would automatically force you to pay the bill yourself. So first you pay the hospital, then you wait for a few weeks, and then the insurance company eventually says, look, I'll pay out that money to you because you paid the hospital. Now, unfortunately, this isn't very easy for the customer, especially when you're dealing with a medical crisis. So nowadays, most insurance companies offer you a cashless benefit, which basically means that you don't have to collate all the bills, the medical documents, none of that. Instead, the hospital will do it for you. They'll send it to the insurance companies, they'll get approval, and then the insurance company will pay the hospital directly. So you don't have to pay anything out of pocket.
But imagine you have an accident and they take you to the nearest hospital, and over there, that hospital is not a network partner. Therefore, you can't use this and you have to foot the bill yourself. Why would you do that? I'll give this an 8 on 10 on the awful clause meter. And the most evil clause is right over here. I can't even spot it. It's that small. There's a star over here. And if you see the end, it says reasonable and necessary. Here's what it means.
So unfortunately, in India, we don't have something called as a standard rate card, effectively because every hospital can choose what they believe is a fair price for a certain treatment. So hospital can overcharge, an insurance company may have no other recourse except to pay up. So what insurance companies do is within their terms and conditions, they have a standard clause. They say, look, we only pay for costs that are deemed customary and reasonable. Reasonable means, look, the cost must be deemed reasonable. If you have a injury to your shoulder or you need surgery to the shoulder, it can't be that the treatment and the surgery costs add up to 25 lakhs. Anywhere across India, you'll probably end up paying 2-3 lakhs. Anything beyond that sum may be completely unreasonable, right? So we will only pay for costs that are deemed reasonable. What are customary is, so let's suppose the hospital decides to add a bunch of ancillary charges that have no relation to the actual treatment, right? So the insurance companies will always ask, do doctors administer this? Do they do this? Is this the treatment protocol? So they look at that. And then if the charges are not deemed customary, then insurance companies can also say, hey, look, we are now going to pay out. Now, who decides what is reasonable and customary? Unfortunately, the way it works is insurance companies generally decide what is reasonable and customary, and most customers have no recourse.
1 minute. You are saying, agar meri tang tooti ho and I'm admitted at the hospital, I need to go and check their rate card with other people to find out if it's reasonable or necessary. I'll say, 500 rupees kam karo because my insurer won't give me the payment. And just because of this, I'll call this a 10 on 10 on the awful... No, on the evil scorecard. But the question is, how can you safeguard yourself? Well, here are 3 things that you should know to protect yourself. Pause this video to read them.